$8 million, Liam, over 2 years. That's the contract LeBron James signed on Friday, a guy who was making $50 million a season, entering his 24th year, taking a 98% pay cut off his market price to play in Philadelphia. Shout out to Philly. My wife's from Philly. It'll be very cool to watch LeBron this upcoming season. And here's the thing. It might be the most rational financial decision any athlete has made this week for sure, but potentially this entire year, because LeBron's paycheck stopped being the point about $1 billion ago. And that contract is the week in a very small microcosm, because everywhere you look right now, salary is losing to equity. And the people who figured that out early are getting paid in ways a box score will not tell you about. Today, why the $8 million man is actually the richest story in basketball, then the gold rush nobody can really enter, a record $9.6 billion Seahawks deal, which we've talked about for a while, Mark Cuban's new fund buying into the A's, Jeff Bezos circling Liverpool at a $6 billion mark, and Rodgers shopping a piece of a $25 billion Canadian sports empire. Then there's the dark side of this boom, with Peacock just posted its first ever profitable quarter, $189 million. In the same week, ESPN and a new Blazers owner handed out a bunch of pink slips to the people who actually make the product themselves. So tough week there, but athletes becoming hedge funds is our last segment. Kyle Kuzma raising a real fund, Travis Kelce doing activist investing, and a college junior buying into a pro franchise with NIL money. That's what we love to hear. That's where we come from. This is Sean and Liam. Clifford. Numbers first, opinions second. Welcome to Playbooks and Portfolios.
1,000 streams. How about it?
1,000 streams. First and foremost, we want to give a big shout out to first our team. Thank you for everybody who works on this on the back end.
Shout out to Max.
Shout out to our fan base, our listener base, our audience. It takes, I looked this up before the show, it takes on average over a year to get to 1,000 streams. We are at over 1,000 now in 4 months. So that's a kudos to everybody who has been listening, watching, tuning in. So cannot appreciate you enough. To that point, we had some comments outside of the segments that we wanted to do on our comments last week about FIFA and how much revenue that poured into this season. The conversation, Liam, was interesting to hear. I mean, kudos to FIFA for obviously driving an amazing spectacle on TV, but the people that listen to this podcast, the everyday man and woman, wanted to go to the game and they couldn't. Private equity, big contracts, TV, really pushing for, the revenue to continue to drive. But what does that do? It ultimately does not allow the everyday fan to actually walk into the stadium and enjoy the game themselves. That was a backlash of some of the comments that we made last week. I appreciate the fans and the audience for bringing that up, because I'm kind of with you. It is the fact of the matter, as private equity moves into sports, as minority stake owners move into sports, they're looking for returns. And now sports is becoming less about the fan, it seems, and more about the pocketbooks of every investor behind it. Liam, what's your take? It's tough. It's a tough world that we're living in when it comes to the everyday fan. You want to continue to keep them as engaged as they can be. And also the fact is, this whole thing is built on fandom and the experience and everything that comes along with that. It's tough to watch fans hurt because of that. So what's your take? How does this solve? What's the go forward? How do you continue to kind of blend each of these different categories together?
Yeah, definitely unfortunate for people that obviously wanted to go to the game in person. I do think watching the games on TV was also a great alternative. I enjoyed watching them. Sure, I did want to go, but like everybody else probably felt, I did not want to pay that much money for a ticket. So I don't know what the exact answer is. I think we saw, like we talked about it a lot on this podcast the last couple of weeks. From a numbers perspective, the World Cup did the best they've ever done, honestly, by a pretty good sum too. And the thing that worries me is, as it continues to go, is it just going to continue to get more and more expensive? You mentioned private equity getting involved. That's usually driven a lot of those things. The other thing that you have to consider is this only happens every 4 years. So obviously a lot of people want to go see it, especially when it's in your country. Could be one of the things that people look forward to for 2 years in advance once they figure out that it's going to be coming to their country. But how do we solve it? I think it does need to be solved. I would love to see the prices lowered to have people maybe be able to come to the games. I think it was a lot less expensive early on. And then as we went, like the final was, I think it was almost $10,000 just for a normal ticket, which is just crazy.
I think the average was 13,500 or something along those lines.
It just, I think, you correct, Sean, you probably know better than me. It's similar to the Super Bowl though. So
it's very similar.
So that's where it's kind of like, is that just the reality of sports now? Is sports as an asset just driving so much revenue and so many dollars that that's what they're able to kind of charge for tickets? I'd like to think there's a way that maybe we can get some sort of prices lowered or a certain amount of tickets lowered for people that'd like to go. Sean, you have a thought here? You're nodding your head. Feel free to jump.
I definitely do. I think that as sports becomes more of a spectacle, this is honestly my take on what works for both parties, right? For everybody listening, when you bring in minority stake owners and all these different people that need to remember, this is not a profit share. This is not a distributions play like you would, you buy Apple. You buy Apple stock, you look for it to rise, and then you get distributions at the end of the year. That's not really how this works. If you're on the ownership stack of one of these teams or leagues, ultimately this is an equity play. You have to drive the value. You have to drive the annual recurring revenue year over year over year. So it has to be higher. It just has to. I think that the answer to especially the biggest sports spectacles, you're talking the Super Bowl, the World Cup, the NBA Finals, the World Series, because it's such a spectacle and because it's honestly driven so much around the marketing and the content, I do believe that there is a very, very unique space for brands to get more and more involved, the largest brands. And I would love to see, I think it would really hit home with the fans. If we're going to have huge ticket prices moving forward, my take is have some of those brands take up hundreds of those tickets and bring the everyday fan to the experience. Don't let them just sit on the sidelines and watch from the couch. That's not what this is all about. Sports is built on the backs of fans loving their teams and wanting to be a part of it. So drive that through the marketing. I think that there's so many different examples of that being done, but I do think that there's activations, there's opportunities. I'd love to see the Nikes of the world, the Under Armours, the Poppies, the Cokes, the Pepsis, all these different big brands taking big slugs at large ticket amounts, honestly, and bringing all these fans together to really, really enjoy the show. Because it's also, if you remember at the NBA Finals, like one of the main concerns was like, there's too many white-collared people in the stands. Like they wanted the rah-rah. They wanted the people with the emotion. It wasn't loud enough, right? And I think that that's a good way to kind of blend this whole thing together. Utilize it. Sports needs to take a step, right? It needs to take a step in a way that, okay, if you're going to make this a marketing spectacle and you're going to make this all about ads and driving eyeballs to the TVs, that's fine. But let's also really think of innovative ways. There's a bunch of innovative ways to make experiences come to life for the everyday fan. And I think that that's kind of the answer is if this is going to continue to build, I agree. Ticket prices kind of have to be a certain way for investors to get every bang for their buck. Also, for the everyday fan, you kind of want it to continue to drive because the spectacle is only going to get larger. It's only going to get cooler, and it's only going to get more fun. So I think that there's a blend of them both. I think that slating 10, 20, 30% of the tickets at the high price, but having big brands come in and doing amazing content around it and following the stories. I would love to see a brand follow the stories of a group of fans, their background, their history, how much they love the team that's playing, and capturing every moment of them coming into the games. I'm not saying to hire me as your CMO, but I'm saying there's a real opportunity here.
This is your next big marketing campaign here. I mean, next big activation. You're giving people free game right now. Somebody needs to get Sean a nice paycheck for this idea. It's actually a great idea. I love this idea.
You agree with me? I appreciate that.
Yeah, I think that there's tons of huge sponsors in these that are heavily involved in these big spectacle events. You mentioned it's Super Bowl, World Cup, whatever it is. I picture World Cup. I see the Qatar Airways logo plastered all over the stadium. Imagine if Qatar Airways flew out people that were huge fans of soccer in general, or maybe the teams playing from those certain areas, and then they follow them along that journey as they did that. That would be some awesome content, and two, a really, really cool activation. I think that's a great idea. I'm surprised nobody. You
also know that ultimately you're paying so much money for the commercials, right? So if you're willing to put up so much money for the commercial and the ad space and the time that's spent on that, why not also, I mean, take the Qatar Airways, perfect example. Shout out to the Al Kabi family. We were able to visit them this past offseason out in Qatar. But my pitch to that whole group would be, imagine a world where Argentina playing in the World Cup, Spain playing in the World Cup. Imagine if you would have bought 5,000 tickets from both teams and brought every single one of those fans on an amazing excursion out to this game. Like, that would have been so memorable and so cool. And obviously, yeah, that's multi-million-dollar marketing spend. I get it. But I think that if you're able to capture the content and the stories behind, not only, there's so many stories on the players, and the stories for the players are great. Don't get me wrong. I've learned we both have learned so many amazing stories of guys and girls coming up and chasing their dreams and making it. But there's got to be space for the fans too. There's got to be a way that this can happen. I think that it would be really, really cool. And honestly, decentralizing the whole thing to see that fandom take place, and also just the stories that would come alongside of it.
Yeah, similar concept to what Mr. Beast did with Salesforce at the Super Bowl this last year, where they had the vault, the $1 million cash prize that they kind of had fans go through and ultimately try to find. I like the idea of kind of bringing people into this, people that from all over, all different areas, all different countries, all different kind of statuses, and then being able to showcase their journey of going to the World Cup or going to some of these events would be a lot of fun. Maybe we got to...
I'm getting you fired up, man.
Maybe we
fired up for this idea. I just pitched you.
Maybe we got to pitch a big advertiser here.
Yeah, that would be cool. But jumping in, speaking of the fans, Philadelphia fans are absolutely crazy. My wife's from Philly. They freaking love the Birds, man. They love the Birds. They love the Phillies. They love the Sixers. I can tell you that. And speaking of the Sixers, LeBron James takes a 98% pay cut off his market price for a 2-year, $8 million deal. But let's talk the numbers first. But I want to give my take, and I want to hear yours, Liam, on why this is actually a really good business move. So contract, like I said, 2 years, $8 million. Player option of year 2 was announced July 24th on Friday last week at age 41. This is his 24th season. Kudos to LeBron, possibly the GOAT. I know that is a very tough debate right now between him and MJ. Our generation really leans into LeBron.
You said possibly.
It's a possible, but also I get it from our parents' generation. Everybody's saying MJ. I also think you got to throw Kobe in that mix regardless. I don't care what any stats say. Kobe is, his Mamba mentality, everything he brings to the table, one of the best, if not the best in the world to ever do it. But LeBron, specifically, his career on-court earnings over $580 million. His recent salary run rate has been $50 million plus a year, and his new deal is quite literally $4 million bucks. Huge pay cut, but off the field, off the court, has been a completely different story between Fenway Sports Group stake, Spring Hill Company. His estimated net worth is over $1 billion. He now joins the court with Embiid, Maxey, Jaylen Brown, a plethora of different players. Huge negotiation for Clutch Sports, his agency. My take on this, you're jumping into one of the best fan bases in the entire country. You know what your next step is, right? He even calls this his last decision. He was quoted as my last decision. I think that jumping into a fan base that loves and appreciates, he's a great businessman. Don't get me wrong. Him and Maverick have reshaped the entire thought process of what it means to be an athlete and a businessman at the same time. I'm not a businessman, I'm a businessman. It's one of the best quotes of all time. Now, I think for LeBron, it's a great move, jumping into a city that is known for their sports, but also an amazing place to build business and grow, network, very close to New York. I think that his next step is to jump into the boardroom at a very, very high level. He has the tenacity. He has the drive. He has the aura to be able to do that. And I don't know what the next step for LeBron might be once he does retire, but I know that he's going to be really spectacular in that space. Liam, do you agree, disagree? Do you think it's a good move off the court as well? How are you thinking about it?
Yeah. No, I agree. I think it's cool to see LeBron.
Would you take a 98% pay cut for this reason?
If I was a billionaire, I would. I would absolutely do that. I don't think it really matters at that point. I think it's cool to see. I think there's a business angle to it 100%. Would love to hear LeBron's take. I'd imagine he thought about it. Maybe not as much as we honestly are, but maybe he did. I do think on the other, just the sports side of it, though, I think he sees a really unique opportunity and good opportunity to go win another championship on his way out. He's got 2 years to do it. The Sixers have been close. They've got a good team. And I think that's kind of where he sees like, hey, where could I go to another city, like you said, that has crazy fans? It's going to be a lot of fun and truly probably just drive a lot of views, a lot of eyeballs to a city that he knows he can help grow and then ultimately win a championship in. I have a feeling that probably was majority of the decision. And then ultimately probably on the back end thinking, okay, I can also get involved with a bunch of different businesses, start to network in that area, an area that he probably isn't heavily involved in. So probably trying to create some new connections and network and in Philadelphia specifically. It was cool. Like we were talking about it before the podcast, Saquon Barkley kind of giving him his pitch on why LeBron should come to Philadelphia. I know he even mentioned how good the golf is in the Philadelphia area, and LeBron's been getting into golf. So who knows what all went into the decision. But at its core, I'd like to think that it was probably just the best opportunity to go win another championship. It would be his third or fourth place. How many? It's been Heat. Did he win one with the Heat? I feel like I should know this. Where all has he won one?
Yeah, he won 2 NBA championships with the Heat. He won in 2020 with the Lakers, and he won.
Did he win in Cleveland with? Yeah. The Warriors blew the 3-1 lead.
And then he won one in 2016 with the Cavs. Now that's also a good point, Liam. Like to this whole idea, you've covered every market almost with this Philly move as well. Yeah. You've covered the Midwest. Your heart, your soul. As an Ohioan, we appreciate it. We think it's been amazing for Ohio. I remember back in 2016, I was in high school, and that was such a big moment for not only the city of Cleveland, with his big quote there, Cleveland, all that. But I think it was really cool to watch him really drive into the philanthropy and the community and everything. Like he really got his staple in the Midwest here. He's loved in Ohio. Then he goes down to Miami, Southeast, gets to Florida. That's a huge, huge market to be able to pool capital, to pool investors, to pool relationships for the future. Then you go to the West Coast. Arguably the biggest franchise of all time in the LA Lakers, and now you're coming to Philly.
Yep.
I think he is a businessman. I would not put it past him if he is thinking about it this way. He's covered every market. He's been able to get real network in every single spot. He covers the entire United States with this Philly move.
Yep.
I do think that it's a great business move off the court, not only on the court, but off the court.
And I think for him personally, whether you agree that he's the greatest player of all time at this current moment or not, I think him going to Philadelphia, another area, another city, another really large city, and winning an NBA championship in that city would solidify him. And it would be hard to say that he's not the GOAT and the greatest of all time when he's done it in all these different areas, all these different regions, West Coast, East Coast, Midwest. Kudos to LeBron for everything he's brought to not only the NBA, but to sports in general. Super excited to see what happens, and probably will be rooting for them. Not going to lie, I'm excited about it. I wouldn't say I'm a huge Philly sports fan in general, but I went to Penn State and I support them, and I really do want to see LeBron win a championship for Philly. That would be a cool story, and also a great way for somebody that's done so much for the game to go out on a high note.
Yeah, I've converted slowly but surely. I've been kind of forced. I got my first shirt was a Philly shirt, kind of neutral. Look, I'm not rooting for the Eagles.
Very fair. I'm not either.
Today, all day. It will never change. There will be conflict in our household every single day along those lines. Okay, I will not root for the Birds right this instant. I never know. But in the current moment, there's no shot. But the Sixers I followed. It's fun to watch. And the Phillies I followed. I love the tenacity of the city of Philly. We've spent time there. We actually did our offsite this last quarter in Philadelphia.
Definitely
appreciated it.
Definitely a tenacious place for sure. Got a lot of crazy sports fans, to say the least.
Yeah, they bleed into Penn State, that's for sure. And I know that Penn State has a very, very soft spot in both of our hearts, so I can appreciate that. But anyways, moving past that second segment, the minority stake gold rush, you're seeing it across every single, not only team, but sport in general. You have 4 data points in 1 week that really say the same thing. Controlled franchises are nearly unbuyable. And so the world's biggest capital is now squeezing through these minority stake doors left and right. You have Cubans. Harbinger buys into the A's. Bezos is approached on Liverpool at $6 billion. Rogers shops a slice of a $25 billion empire post Seahawks. And front office sports kind of asks who even sells next. There's a lot of different opportunities in a bunch of different ways. But to kind of expand on that, Mark Cuban's group, he's the GP president of Harbinger Sports Partners, on Thursday of last week, minority stake in the Athletics, pre-2028 Vegas move. Rashawn Williams, CIO, Falcons minority stake owner. You got Jonathan Mariner, MLB CFO. The fund's first franchise deal. All those guys are in it. Fund's first franchise deal. Then you have Bezos in Liverpool having the conversations at a $6 billion valuation. He's not committed, but there's conversations on the doorstep. And now you even have, as I'm reading it, this minority stake across a consolidated entity across the Leafs, the Raptors, TFC, Argos, Blue Jays, kind of a syndicate. You're seeing this happen more and more. I've actually seen a couple of these deals behind the scenes. I won't speak on specific ones, obviously, but I've definitely seen what these look like, these groups that come in. It's an LP stake. You could kind of buy into one fund, and you own now 1, 2, 3, 4 teams, whatever it might be, across numerous different segments, whether that be the NBA, the MLB. You're just kind of getting a diversified portfolio by just buying into one fund. What's your thoughts on this, Liam? Do you think that this is good investment, bad investment? Also, just the take on being a limited partner, what that means for sports in general. I know we kind of talked about it, private equity moving into sports, some answers there given earlier in the episode.
Yeah.
What's your thoughts?
A big part of it's private equity. I think whether it's a good investment or bad investment, we could dive into that. I think what it is at its core is it's an experiential investment. You're investing in something that then allows you to have an experience. It's not your typical investment. It's something that you can say, hey, I now own a part of this team. I'm sure you get access to certain things that most people can't get access to. And now you can bring your family, bring your relatives, bring all these people around this experience that will last a lifetime beyond the money, whether you make the money, lose the money, whatever it is. These memories and experiences you can kind of create through getting a minority stake in these teams, I think is ultimately what drives a lot of it. The passion that probably these people the reason that they're investing is because of the passion that they have for the team. And then with that, then they're thinking, okay, if I invest in this, I can get box seats for every single game and bring certain people or bring my family, or maybe even help me on the business side, bring investors or entrepreneurs of something else that I'm doing. So I think a big part of it is that experiential piece of why we're seeing a lot of these minority stakes. Sean, I'd be curious to hear what your take is, because a big part of it too is, and I know we've seen some of these deals and we won't get into the specific ones, but do you feel like they're good investments? Do you feel like when will they see upside from the actual returns perspective? Or do you think it's more of like a groups getting kind of a consolidation of all these different kind of, you can invest, if you invest in this fund, you also get a little bit of this NBA team or NFL team or this soccer league. Is it more of a fee farming kind of tactic for some of these groups, or are they really expecting to drive returns in the end? What are your thoughts on that, Sean?
I hope it's not a fee farming activity. And by fee farming, for all of our viewers, meaning, you raise $100 million and you're taking 2% a year or whatever it might be just to look over the fund. You're making $2 million a year on the GP side. I don't think it should be obviously about that, especially on owning teams. Like the biggest thing that I really do believe in is the majority owner, whoever that owner should be, it is in the current moment. That person needs to be bought in. There needs to be a long-term plan to build the city. You have a big responsibility to not only the team, but the city to be able to really drive the value, not only for your team, but around the team. But I think when it comes to these minority stake investments, I think it's a blend. I think it's a blend between social capital, people trying to get in the door, rub shoulders. I mean, like we've said for numerous episodes, sports is a great place to plant social capital and get to meet people that you never would have met before, get in different doors, get in different locker rooms, be able to really flex your network and get some new business opportunities that you might not have known beforehand. I think it's also a great place, Liam. One of the things we haven't really done on our episode is actually we talk about all the sports investing across the entire ecosystem. We haven't really ever talked about what we invest in, which is quite literally 1,000, 1,100, 1,200 times cheaper. But this is one of the reasons why we believe so heavily in what we invest in, which is sports adjacent assets that start in the sports ecosystem And by the sports ecosystem, I mean all these elite sports teams and leagues. There's so many amazing products and companies that are coming out of these individual facilities. And Liam, if you want to kind of hit on those, what we actually look for, the downstream applicability, I think this is a good segment to kind of, and I know we didn't have this on the radar, but I do think that this is a good opportunity, because that was another thing. I posted my day in the life, appreciate all the views. I think a lot of people just had questions. Is this angel investing? Is this actual fund? Like, how are they doing this? All this kind of stuff. So if you want to kind of give our pitch of what we invest in specifically to all the founders out there that are attacking this ecosystem, and what we love to do.
Sure. And I think we got into it a little bit on the first episode, but that was before we had 1,000 streams. So happy to go through it again. It was funny you brought up your day in the life. I quickly looked at the comments. Look at comments, don't look at comments. I always find them funny. They don't bother anybody. But somebody commented on your thing. You specifically said like day in the life of a NFL athlete, and also somebody building and scaling a venture capital firm. And somebody was like, I think that this is just what you mean by angel investing. And it's like, well, yeah, there's two different things. Like Sean said, what we specifically invest in is kind of, we talk about the teams, we talk about the leagues. It's not that. It's kind of the infrastructure that runs all of these things and makes them go from the ticketing to the technologies that are actually in the buildings to the recovery modalities that the athletes are using. All these different segments and industries and things that can come into sports is what we look at. The
Whoops, the Oura Rings of the world, the Normatechs, the Teamworks, the Catapults. Have you ever seen people wearing the bra looking thing, and you're like, why is a man wearing a big bra? Well, there's actually a device on the back of that bra that we actually call it a bro, which is funny, but there's a device on the back. It's called Catapult. Great company, amazing business that actually tracks the speeds and everything. There's a lot of infrastructure that goes into it. Sorry to cut you off, Liam. I just wanted to throw out kind of some examples.
Those are great examples. I'm not saying we've invested in those companies. Those are actually companies that are much further along, but investing in companies at an earlier stage that you can kind of catch when they come into these elite sports facilities before they truly scale, and before they not only scale in sports, but then we always talk about it, investing in companies that touch the sports ecosystem in any way, shape, or form, and then have downstream applicability into other industries such as the military, healthcare industry, industrial, consumer, all these other industries where as investors, we look to try to obviously validate our products in sports. That's where the moat is. That's where, if you're going to pay Joe Burrow $250 million to use some sort of product, pretty sure it probably will work well for any average everyday consumer or somebody in healthcare or somebody that's looking to get their knee fixed up or whatever it is. But we always look for products that are in those elite facilities and then can start to branch into, like I said, healthcare, industrial, all these other industries that ultimately drive huge returns for investors. So that's what we look at. In simplest terms, it's anything that advances human health, human performance, and human potential. And then we always talk about it, and we've said it on this podcast before, but that term sports adjacent, where I mentioned it, but companies that start in sports and then can go into these other verticals, that's what we look to invest in. It's not teams, it's not leagues. Maybe one day, Sean and I have talked about it, we want to own a team one day. But to get us to that point, we need to invest in all the underlying assets below the teams that ultimately drive the team's revenue and drive the players to become better athletes and healthier athletes overall. So I know that was a little bit of a different tangent.
It's a great point. It's a huge passion of ours. We grew up in the entrepreneurial game in college. A lot of people know that story. Please feel free to look it up. It's all online. But since that time period, we've just fell in love with the founder game. And it's our way of it started as some angel investing for sure, but as we've seen this kind of opportunity continue to arise, it's a vast ecosystem, amazing people, amazing founders. Would love to highlight them. We really need to bring a couple of them on the show to really showcase their amazing abilities. But we are so bullish on this industry. You continue to see the biggest tickets and the highest raises and all these different opportunities when it comes to the teams and the leagues. I can assure you that there are billions of dollars that are being built within this ecosystem, sitting inside of each facility. It's a gold mine of people, of products, of companies that are being built. So if you're a founder, just an FYI, would love to meet you. If you're building in sports, we would love to support you. And it is not just angel investing. There is a very, very specific fund, our fund, that is behind it, and also specifically as well there's an ecosystem and a cadence around how we actually drive the value. That is a great way to then segment into a completely different topic, as we usually do. Segment 3 here, Peacock's profit. ESPN sadly pink slips. The same week streaming finally proved sports flips a P&L on its head. Profitable week. First ever profitable quarter for Peacock. Golf clap. The people who makes the sports TV actually happen got cut. And it kind of sucks. ESPN, NFL Network, executives laid off, from insiders to ex-players and a bunch of different things. There's this big boom. The big boom's bill is now being paid by the head count of a bunch of individuals. And it is sad. It's really sad to watch the likes of Ryan Clark, Cam Newton, Bart Scott, Charles Davis, David Lloyd. I mean, David Lloyd's been at ESPN since 1997. It's a long, long time running. And back in April 2026, the absorption of NFL Network and Red Zone, NFL took a 10% ESPN equity stake. This is their way of cutting down some of the people to make this thing profitable and make this thing go. But this whole blend of all the things that we're talking about, that's kind of the theme of this whole podcast right now. You have so many investors behind the table. They're looking for their returns. They got to flip their P&Ls on its head. And now you're seeing the brutal reality of what cutting costs really mean for the people that work within the sports world. It's sad to see. Liam, is there another answer? Do you have a contrarian viewpoint? Is this a good thing? Or, I mean, what's your thoughts here?
I think it's never a good thing when people's jobs get cut. So definitely want to say that and make that first priority. Obviously, as long as they're not getting cut for any bad reasons that they should be cut for. But if it's just to grow the business, it's unfortunate. But the reality is sometimes, I mean, we're a sports business podcast. Sometimes you got to start to make money. You got to start to be profitable. There's investors involved. They're looking for,
sometimes, all the time.
They're looking for returns and money back in their pockets. And ultimately, those voices are going to have a bigger say. And I think here we're seeing that probably kind of firsthand with Peacock obviously going and putting out their P&L and having their first profitable quarter. Or was it month or quarter? Yeah, quarter. I'd imagine it was their first profitable quarter because of some of these cuts and layoffs that they made. And it is the unfortunate reality. But it does have to happen. I think on the bright side and on a positive note, some of these names that we've mentioned are good at what they do. People, like, perfect example, like somebody like Cam Newton, whether you like him or don't like him, he has created a huge brand for himself with his own kind of podcast and thing he does outside of working for ESPN and working for the media companies. I'm sure it won't be hard for him to land on his feet and sign with another group if he really wanted to. And even if he didn't, he could still absolutely crush it with his podcast and everything else he has going on and get into the marketing side and ultimately gives him the freedom to also create it from a creativity perspective, do what he wants now and maybe not have to. I know sometimes when you work for some of these large media companies, you have to kind of say certain things and talk about certain stories and things that maybe you're not even as knowledgeable about, but you still are forced to talk about it. He can now go out and talk about whatever he wants and do whatever he wants if he wants to stay in his own lane. So that's just one example. There's a ton of people on this list that have done that.
I was going to say that hasn't stopped the likes of some of these guys and girls to still speak their mind. Appreciate them for that, even when it's not what some people want to hear. But I agree. I think that it is natural next steps. These media companies need to take the next step, right, in order to become profitable and actually see green. They need to be able to move the needle. So it's going to take some time. And I do believe that the athlete-owned media is a boom right now. And the fact that a lot of these personalities have built their own socials, like it's not just on the backs of, oh, I'm on ESPN and now my whole career's over. They have a bunch of social followings. They have their own things going. So it's leaning on that. It's not just the athletes that are building within the ecosystem. It's also the people in media being able to do so. I think it's important to continue to always have your own brand, right? I mean, this is a great reminder that in the world of AI, in the world of this ever-changing environment, brand is going to be so important. That's honest to God. I can tell you, I can assure you that is why we started our own podcast, right? Because we want to make sure that we are continuing to build our own moat. Selfishly, in a way, we want to provide all the content and the value and build an audience and a fan base around this. It's very important. We work really hard on the back end to put together a really cool podcast every single week and talk about a bunch of different things. But a little selfishly, like we one day, Liam, we're hanging up the cleats completely. completely. It's over. And I'd love to be able to have that next step. I'd love to be able to continue to talk about sports and the business behind it. And it's a passion for both of us. So that's why we continue to do this and build on Playbooks and portfolios as a whole. I think that that's the same story for a lot of these individuals. I think it's important to do so. They have done so. So praying that everybody lands on their feet as cuts continue to happen. I'm sure that it's only the beginning, not only for the people on camera, but operations behind the camera. It'll be interesting to watch new groups pop up and new media pop up as well. Anything else on that topic, Liam?
Covered it. Sounds good.
Perfect segment. And the last segment here we have athletes are becoming hedge funds. Yes, they are. We just spoke ad nauseum
What a
about
headline.
what we're doing currently to do so. And I got to give a shout out the fourth quarter. Great podcast over there. Love listening to those guys as well. They called it top athletes investors now look like CIOs. Chief Investment Officers. Damn right they do. It's awesome. This week's proof, Kyle Kuzma, moving from Angel Checks. He is amazing investor. I think he's done some really, really cool things. Followed his career off the court more than I followed it on the court. No offense to Kyle, but I just think that his off the court is just as cool. I really do. I'm a big nerd, so it is what it is. But he's now raising his own venture capital fund layered on Travis Kelce's activist stake. Juju Watkins, USC junior, buying into a pro team with NIL money. Huge golf clap for that. Not even a golf clap. I'll give a real clap for that.
Cool.
I mean, amazing. It's really cool. The athlete ecosystem is booming. Booming. I want to yell that in the mic. Booming. Kuzma talks about planning a dedicated venture capital fund, $125 million of career earnings after next season. He studied companies 3-4 hours a day in season. Lots of hard work, dedication into this crazy portfolio he's put together. SpaceX, Anduril, Kalshi, Prometheus, tens of millions of dollars deployed. And he now has co-founded the Oath Group. He actually started back at Scrum Ventures as an advisor back in 2024, March 2024, and he's co-invested alongside Mark Cuban. Very similar story, a higher earner than us, I must say. Kudos to you, Kyle. You've done a great job. You've had a great career, but you've already kind of planned your next step. And I want to hit on this point, and I want to flip it to you, Liam. I've always believed now, as we've kind of looked at every direction, we love the business world, obviously love playing ball. Don't get me wrong. Love playing ball. Love dedicating our lives to playing football and putting on for great cities and great teams and being in the locker room, all those different things. But learning what your why is outside of the game is a part of it. People have learned that. We talked about LeBron, Maverick, what they've done. That whole segment was all about learning your why and having the next step, the next passion. Because there's so many athletes for the longest time, it was shut up and play, shut up and play, shut up and play. And now it's much more about building through investments, being able to actually showcase what you love outside of the field, outside of the court, outside of the ring. Whatever that might be, it's been very cool to watch these athletes really, really drive into that, because it's not just investing for the dollars. Obviously, you want to see a great return. But even if that money went to zero, I can almost guarantee you that Kyle Kuzma would be very proud of the investments that he made, because now he knows what his next step is. And he can, honestly, I know that for me, I won't speak for you, Liam, I'm sure it's a very similar answer, but it's given me a lot of freedom to go out and just play. Just play ball the way that you want to play ball and have fun doing it with your teammates and the fans around you. Because ultimately, it all does come to an end one day or another. You'd rather it obviously be a long-lasting career, but one day or another it does come to an end. And it is very, very cool to watch athletes find their why through investing, getting in these boardrooms, having conversations with founders, having conversations with C-suites, being on advisory boards, and doing so that way they can really, really drive what their next step in their journey is. Liam, I'd love to hear your take.
Completely agree. And we talked about this so much, really our entire athletic journey. I know a ton at Penn State when we were true entrepreneurs growing and scaling a business, and we would wake up and we would do all up meetings, and we would be with the whole entire team that's
a podcast in itself talking about that journey.
100%. But then we would go to the facility, and we'd already have been up, and our brain had already been moving, and we would feel like we could just go in, and it was like, okay, now it's the fun part. Like, we just did all this brain work and all this stuff, and now we can just go run around and play football and play loose and know that, hey, we've got a whole nother thing going on. We're absolute worst case scenario. You can always fall back onto things. And I think it's cool to see so many athletes now getting involved in that, because they probably, if we had Kyle Kuzma on or any of these other athletes that are doing it, they probably would say the same thing, where it's just a nice breath of fresh air and a break of like, not everything revolves around the sport that I've dedicated my entire life to. Because it's so hard. It's so hard as an athlete to feel like this isn't the whole entire world. Like, your sport isn't everything and it's the end all be all. And if it doesn't work, like you've got no life. It really is. And I've been there and I feel it. And then as an athlete, I felt that majority of my career. But as soon as you start to find other passions, it doesn't even have to be business. So for us, it's business, and we talk about business on this podcast, but it could be anything. But anything to get kind of outside of what you do 24/7 in playing your sport, and just take a step back, take a deep breath, and go fish or go golf or go do, I don't know, go read a book, like whatever it is, something to just take a breather, take a fresh air, because it ultimately then will pour back in and it'll help you with your sport. And I can say that from experiences. It's definitely helped me with my sport. I know, Sean, you would say the same thing. And I'd imagine if we interviewed all these other athletes, they would probably say something similar. There's so much more out there. There's so many things you can get involved in. A lot of people are just so happening to get involved in business, which is a lot of fun, specifically investing. And I'm going to support that no matter what it is, because that's our world, that's what we live, and that's ultimately what's gotten us to the point we're at, and we're just getting started, which is the exciting part.
It's about balance, right? It's about balance. Every single piece of life in general, you got to hit every quadrant. You have to have your family, you have to have your fun, you have to have your job, which for the professional athlete is sport, but ultimately you have to have a why, and it can't just be sport. It's so easy to get wrapped up in all this, and it's so important. I do not want to understate the fact that playing in the National Football League is the most important job. It is so critically important, and it's not only just important on the field of what you do and how you carry yourself and how you play and prepare and all those things, but it's also critically important for what you do in the community, how you give back, how you go to the middle school that you were at and give the speech, inspire the kids. It's about the kids, it's about the fans, it's about the community every single day of the week. But newsflash, all of us professional athletes are also people too. It takes balance, and I've definitely felt it. The balance that we've found between business and between sport has been so critical in our development, and it's made us better players. And I'm sure that Kyle Kuzma, Travis Kelce, Juju Watkins, shout out to Juju Watkins. We didn't get a chance to. So the first ever NCAA athletes directly invest their NIL earnings into a pro women's team, the Boston Legacy, alongside Caleb Williams and Elia Boston. I mean, it's so cool. That is a great next step for Juju. It is amazing to see. Juju, if you ever would love to talk about the story, we'd love to host your story on the podcast. It would be amazing to be able to feature what that looks like. But it is about creating that balance, about creating a legacy, right? We all want to leave a lasting legacy when we leave. And this is just one piece of being able to do so, investing in companies that you truly believe in and the founders that make this thing go. Kudos to all the athletes out there. It is really, really cool.
100%. And speaking of balance and playing a game, we're going to go ahead and finish this episode with playing a game. So the game of the day, you are our contestants. It is becoming a CEO. So I'm going to name 3 different...
Did you say becoming a CEO?
Becoming a CEO. So here, I'm going to explain it. I'm going to name 3 different sports businesses, and you are going to think about, if you were hired as the CEO tomorrow, what would be the first thing that you would do, implement, cut, add, whatever it is. You're the CEO, put your CEO hat on. We've been there before. You're doing that at a big scale. These are going to be 3 large businesses that everybody knows, big brands that everybody knows. Understand the game. I think it's pretty clear.
I gotcha.
You're the CEO. Yes. Here we go. First one.
I can't wait to make my decisions here.
You just got hired and brought in as the best hire gun CEO there is for Nike.
All right. Big brand to take over. Having some tough times. I appreciate the offer here. I appreciate now stepping into this ginormous opportunity, a legacy brand that has redefined what sports looks like. First and foremost, I'm going grassroots. I think we've even spoken about this on this podcast specifically, but I'm getting back to what makes Nike Nike. Just do it. For the average fan, for the average player growing up, the kid watching the game, wanting to be on that screen, the same kids that were once us. I'm diving in there. So I'm pouring into high schools. I'm pouring into youth sports. I'm giving back as much as I possibly can. I'm driving community more than anything. That would be my number one.
I love it.
Movement that I would make at Nike.
Sean, as CEO, being a man of the people, always important, keeping community at first hand. Number two, now this one's going to be interesting because we actually spoke about them in a sense on this podcast, kind of in a somewhat negative light, not necessarily negative, but something that they're doing that people could look at being negative. Next company that you're becoming CEO of, what is your first move, is ESPN.
Okay, ESPN. If I were to take over ESPN right now, I mean, we spoke about it a little bit, but I would really drive the fact. I would make some big purchases of some media assets, specifically athlete owned, telling those stories. I would go out and I would buy up the Playbooks and Portfolios podcast. I'd buy up a bunch of different podcasts. I'd buy up a bunch of different media around athletes driving stories. I think storytelling is so crucial. It's what has built ESPN to this day. It is so important, and it is the future of what this is going to look like. You cannot recreate the stories of every single individual. That is one thing that AI cannot do. So I would lean into that. I would go actually further away from AI, and I would go more into truth telling. I would go more into the backbone of what has built ESPN so great to date. That was a rhyme. It's awesome. And that's what I would do. Build what has built ESPN to date.
I love it. I love it. And lastly here, we've got a company that's ran by an unbelievable CEO in Michael Rubin, a company we've talked about a few times on this podcast,
Fanatics.
A company that has fan gear, collectibles, gaming, betting, marketing and entertainment, a bunch of different things that kind of cover Fanatics. Sean, you just got hired as the CEO of Fanatics. What's your first move?
Yeah, I would say I don't know how Michael Rubin got outrooted as the CEO. That'd be my first question, because he's done a pretty damn good job.
For sure.
But you know what I would do? I would go to those major events like we spoke about at the very first portion. I would actually probably take off my CEO hat and put my CMO hat on, and I would bring every single fan that I possibly could to the games. I would pay those big tickets. That would be where my marketing spend would go. And I would drive so much media around the fan and really showcase. I mean, it's Fanatics for a reason, right? It's about the fan. So let's really, really focus on the fan story. I would travel. I would find every single possible crazy fan that I could in every city, bring them to the games, and really showcase that fandom, bring a bunch of merch, be able to drive sales that way. I think it'd be really, really cool to watch the fan story come to life.
I love it. I love it. And in light of that, Fanatics just had their Fan Fest this last week from July 16th to July 19th. Looked like an absolute blast. I had a bunch of people that I knew that were there, got to kind of live through it and look through it through their social medias. So shout out to Michael Rubin and everything he's built with Fanatics. That concludes our game of the week. This was a fun one, Sean. Appreciate you being a CEO of 3 huge companies. Don't know how you're balancing it, but until next week with the game of the week, we'll keep getting more and more creative with it.
No doubt. And so to run the week back and what we talked about, we got LeBron signed for $8 million because his equity has outgrown his salary, clearly, right? The Seahawks went for 9.6 and has now slammed the door behind them for all these different minority stakes being able to now join the Wave Peacock first profitable quarter, and you have athletes galore making huge moves in the boardroom. One thesis ties this whole thing together. In sports, the money is migrating from the paycheck to the cap table, and the only question that matters is which side of that migration are you now on. The players who get it are becoming owners, operators, and GPs. The capital that gets it isn't waiting for a $10 billion franchise to trade. It's buying the infrastructure underneath the athlete for pennies on the dollar. That's the gap. We buy the gap. We talked about that in the podcast as well. But if you listened for 53 minutes of us talking, please like, subscribe, go to every social channel. Please repost. We'd love to be able to get new audience to the table. We also love to just drive please keep commenting. Like, that was one of the things that I really did appreciate from this past week, is people commenting on our episode and having conversation around the good and the bad of what we talk about. I think it's very, very cool to be able to get everybody's opinion. But from playing the game to owning a piece of it, this is Sean and Liam Clifford with Playbooks and Portfolios. We will see you next week.